Hey guys, so I wanted to start a better known indicator series where I run through a bunch of stuff that I use on the day-to-day and how you can use it to, build your tool belt. So today I'm talking about chart patterns. Now when I first started trading, I used this sheet religiously. I printed it out, I put it on my wall behind my trading screen until, I could know these cold. That was, behind my screen for longer than a year, just looking at these, looking back at the chart. It really helps, especially if you're a newer trader. So what I'm going to do in this video is go through most of these patterns and just show you that they do happen all the time in all markets and how you can trade them. Now most of the entries and exits and stops and everything are all marked on this chart, so I don't really need to go through that again, and I'll link all these charts I'm going to go through in the description. So another thing is when you're talking about any TA or trading, you really have to think in terms of probability and not absolute. If I see a pattern or an entry signal, they're based on probability of those patterns working in the past, and obviously that means they can fail. So you'll see certain patterns over and over, so it's important to know what to look for and how to trade them, like I said. So in each chart pattern, you'll see will either be a reversal or a continuation. For patterns to exist, the trades are best taken after completion of the pattern. So for instance, in a head and shoulders, you don't want to take a trade up here. Okay, you want to take a trade where it says to take a trade, where the entry is below the neckline. That's the highest probability of success. If you're getting in early and earlier on these wedges or these head and shoulders, you're going to start decreasing your probability of success. So let's start with everybody's favorite, the double top. Now, the classic example of this is the all-time high double top, which occurred around December 2013. And this is when I knew absolutely nothing about trading, so I didn't see this coming. I was buying up here, thinking we were going to 1 million, but anyway, so you want to remember M for murder, W for win. So M is a double top bearish reversal, a W is a double bottom bullish reversal. Okay, now the next pattern would be the double bottom, and this isn't the greatest example of this, but I really like this because it's on the weekly Euro chart. So this is a very loose Adam+Eve, but I think it's there. The other part about this Euro chart is it plays into two of my favorite cloud strategies, which are this. I'll explain these in another video, but the Kumo edge to edge, meaning when we breach the cloud, we're going to reach the other end of the cloud. That's a high probability trade. And the other trade I like to take is the flat Kumo trade. So anytime you see this long flat Kumo, there's a high probability we're going to hit that level at some point. Now, of course, the Brexit referendum vote is going to decide this, I think. So TA is set up for up. We'll see what happens. If they decide to leave, it's going to test this lower level at 1.05. But should they remain, I don't doubt it'll happen in one candle. We're going to see some insanity, probably first to this level, and then eventually up to here, or maybe in a week or less. I mean, expect the volatility to be just absolutely nuts. So anyway, that's an Adam+Eve. You want to look for those at the bottom of a big downtrend or a big down push. The next few are wedges. So this is just to show you that falling wedges and rising wedges can occur on both sides of the candle. This is a really good I think a really good falling wedge. Now, I haven't checked all these to figure out where they break up or down, but you're welcome to go back and check. This one was from May 7th, 2015. Here's a falling wedge. This is a reversal down. You'll see this go up and then fall down the bottom, usually to about the 50% fib, or sometimes in here. I think this one worked out. Again, this is June 5th. The other part about this wedge is it's got a bear div, which I haven't talked about in any videos yet, but it means you have a higher price and a lower oscillator. So while price is moving up, bullish momentum is decreasing, and that's a sign that the pullback is going to come. You also see the bear div in the MACD, and you also see a cross on the Stoke, which is a signal of reversal as well. So this is a really nice setup when you see this. All of the stars have aligned. I'm pretty sure this did break down. I don't remember how far, but you're welcome to check June 5th of this year, 2016. Here's a falling wedge in Bitcoin, November 6, 2015. I can't remember what happened in this one, but I really like the falling wedge trades because you open at the point of the triangle, stops at some low, and you just hold it until you decide enough's enough. I mean, this horizontal right here is good. This horizontal that I have on the chart is good. I don't think we got this high. I think this one, I can't really remember, to be honest, but again, you can go back and check. And as with the rising wedge, with the falling wedge here, you have a bull div, which signals a reversal as well. And a bull div on this OBV, low in price, and a higher oscillator. I mean, this is a loose div because I'm not counting a wicks. Some people get really angry when I don't do that, but whatever. So here is a falling wedge on odd USD, which did pan out really nicely. I'm using the pivot here as a close target. I think it went actually much higher than that, and again, I'd have to check. This is February 5th this year. Again, you have a bull div on both the oscillators here, MACD and RSI. You're getting lower lows in price, higher lows in oscillators, weakening bearish momentum, suggesting a reversal. So the next one would be a head and shoulders, and you typically see these at the top of a trend. And they're usually everyone's favorite to call out. It's important to not only recognize the pattern, but the volume profile. Okay, so I don't have the volume profile on this one, mainly because it's Forex and it's hard to judge volume. But like I said, usually a head and shoulders is at the top of the trend. I'm highlighting this one because we have a head and shoulders at the bottom of the trend, which is as bearish can be. Now, I don't know if these actually pan out normally, but if you check the oil chart, which I'll do on the next slide here, you can see that we definitely broke this. So it's interesting that we got a head and shoulders at the bottom of a trend. Like, it doesn't get much more bearish than that. So you can see here's the head and shoulders again, and we get a new low, much lower. Basically the distance from the head to neckline distance is basically what we get, the next plunge down. Another thing signaling this is super bearish is this is called a diamond top. I'll talk about those in another video, but this is a candle pattern to watch out for a bearish reversal. And this is on the weekly chart, so these patterns are well established. So looking at the current oil chart, you can see we have an inverted head and shoulders just trying to form. Now the volume profile doesn't match. The volume profile you want is the highest volume to be in the left shoulder with decreasing volume the entire way down, with a breakout below the neckline of the right shoulder. Now this doesn't really match this either. This is a bad example, but you can see that it's sort of there. Some weirdness on this is that there was a giant bull div that took forever to play out. So these divs aren't the greatest all the time. Now another pattern that's really great for continuation is cup and handle, and it's not on this chart that I'll link to you guys, but you'll see exactly what it's trying to tell you here. You're going to get this round bottom, and then you're going to get this sort of V handle. It kind of stops at the 50% fib. I kind of like to think of it as a reverse Adam and Eve. Adam and Eve is a V and then a rounded bottom, but here you're seeing a rounded bottom and a V. The most recent example of this would be Ether. I don't trade Ether. I think it's garbage, but anyway, there was definitely a cup and handle in here that was supported by the Kijun on this tweezer bottom. So there's all sorts of stuff that says this is going to go up, and it did. You can look at a chart. This was from June 5th this year. The great Bitcoin cup and handle played out. This is from the other day, June 6th. We were talking about this for months when this ascending triangle was playing out. It's a pattern I haven't talked about, but I may discuss that in a different video. So now it's your job to do your homework, print this out, paste it on your wall, make it your desktop background, whatever you have to do. Refer to it often, know how to trade these patterns, look for confluence with divs, and look for volume confirmation. You're going to generally see descending volume confirmation. There's a current, let me pull it up once. So this is Bitcoin 30 minute. We currently have an active inverted head and shoulders trying to play out. I'm actually long right now. I jumped the gun. But you can see we have the volume profile that matches, which is this descending volume profile. This shows weakening bearish momentum. We have oscillators bottomed out, weakening bearish momentum. This MACD has moved up a lot. This RSI has moved up a lot. There's no div on it, but that's fine. There's a 30-minute Stoke cross, which is money. There's almost a quad bottom, super rejection-y wicks. You can see these shoulders match in the zone. And when you're measuring targets for head and shoulders, you want to take the distance from the neckline to the head and then apply that to the neckline up or down if it's a normal head and shoulders. And in this case, we get a sell zone or a target somewhere between these two levels here, which makes sense. This is also the 61.8 fib of the entire, well, not the entire, but the little move up. So we'll see if this works out, and happy trading.